Hi, my name's Lee from eMoneyUnion. Thanks for stopping by. Just going to go through a few slides about eMoneyUnion and the opportunities that are presented here today for you. eMoneyUnion is about bringing people together. Bringing together people who have savings that are getting little or no interest from their banks and building societies, together with borrowers who currently have no access to finance. The internet and crowdfunding and peer-to-peer have given us an opportunity to bring everybody together. It's a financial phenomenon. Remember this guy? I certainly do. I was a bank clerk at 16, an office junior. I thought, this is it. I'm going to be a financial advisor. I'm going to make a great living for myself. I had the braces, I even had the Filofax, and I had one of the first mobile phones. Exciting times. My financial advisory career with the banks was cut short in '93 when I had a motorbike accident. I then sat at home after about 18 months, got something through the letterbox. Lee, you have a consumer credit license, why don't you become a finance broker? You can work from home. So guess what? That's what I did. I then expanded from being a finance broker and requalified as an IFA and launched the first online IFA called moneybrain.com. We were doing such great things that many other financial advisors asked me if they could get involved and provide access to what I was doing. So I created the first online insurance network that gave financial advisors access to exclusive products and paid more commission than they were currently receiving. Such was a success that we grew about 30% compound growth every month and successfully floated the business on AIM in 2002. We got up to £100 million a month through acquisition and development, and things were going great guns. This was the good times. The wheels started to fall off though in early '07. Halifax Bank of Scotland had funded a deal for us all to go to Monaco, which was great. However, towards the end of the meeting, somebody from Risk stood up in the room and stated to us that Halifax had a black hole in their balance sheet that needed filling at the end of the year. That black hole was £80 billion. We knew things were going to have to change. With the pending problems ahead, we needed more capital. We didn't have it. So we sold the business to a Lloyds Development Capital business to actually move the clients to a safer home because things were going to get really bad. Then Northern Rock hit. Game over. Well, it was a very dark few years. There was no lending. There was no mortgages. The property market was on its knees. For 3 or 4 years, still no lending. So in 2011 I thought there must be a better way. There must be some way. Savings were getting higher and higher than ever before. We had the lenders. We have the borrowers. But there was no way the current banking system was going to be able to change. It had big, big problems. Problems that are still there today and still unresolved. I got together with some techies and I thought there must be a way to bring the savers and lenders together. We have the demand. It was financial madness. I had a meeting with Google Own Beat That Quote in 2011 who said to me, Lee, we've got 20,000 loan inquiries a month. Nobody wants to take these leads from us. You must be able to find a home for them. I thought I'd found the answer. There was this great thing called peer-to-peer. Zopa, RateSetter were new kids on the block who suddenly had an idea that they were actually going to provide savings rates to people that were getting little or no interest. On the flip side, they'd actually start lending to borrowers. I thought this was fantastic. This is what we need. So I looked at them, spoke to them. They weren't interested. All they wanted to do was deal with the top 5% of borrowers. They didn't want to deal with the mass market. They were extremely conscientious about which type of clients they wanted to do. This wasn't going to solve my problem, so I looked further afield. Lending Club and Prosper in the States, they had a lot higher diversified product range. I thought, I've dealt with the Americans before, they'll surely love to have the opportunity to lend to UK consumers again. When we spoke to them, not really interested. They are growing at such a phenomenal rate in the US that they have got too much on their plate. Not interested in dealing with the UK borrowers. Now, what was interesting is they had a model that could be replicated here in the UK. However, Zopa and RateSetter weren't interested. If we just take a look at the next slide, I'll explain the difference. You can see there, the US lent to all borrowers, all profile of borrowers. All that happens is, very much like car insurance, if you're a high risk, you pay a higher rate. The flip side for those investors or private lenders is they get a lot higher yield. And obviously you can pay for insurance to cover that risk of borrowers' non-payment, and that's called margin. Now in the UK, this is where we're at the moment. Zopa and RateSetter are doing a fantastic job growing month on month at a phenomenal rate. It really is an exciting opportunity for them. However, the issue that I saw, which is why I'm here today talking to you, is what about all the other borrowers? 90% of the UK fall into this other category, and there's no peer-to-peer lending going on. All of these poor people from A to C, a lot of them anyhow, have lended with Wonga, other payday lenders, Dollar. They've just landed with extortionate cost of credit because there were no other solutions. I'm here today to plug that gap, to make the bridge between the two. Not only are we doing a social good by lending to people who are currently caught in a high cost credit trap, we want to bring them back onto an affordable loan rate. And in conjunction with that rate, we also pay the lenders the highest rate of return commensurate with the risk. We want clients to come onto our platform and move up the risk grades. There is no reason every year that a client can't go and step up from, say, a B3 to a B2 to a B1 and improve their credit rating. It really is an exciting opportunity. Well, this opportunity is actually here today. We've actually done our first loans. We're now funding weekly. Investors are joining daily. It's an exciting time. The government have even come on side and provided an opportunity to actually invest in our business and get tax benefits. Immediate 50% tax relief. That's for the first £150,000 invested to buy shares in our platform. But equally, we want you to be lenders. We don't want you just to buy equity. We want you to buy into the whole proposition with us. We really feel we can change the financial landscape here today. It's an exciting time. Come and join us. Bye now.